In this episode, we speak with Matt Amico, partner at Turn River Capital, a lower middle market private equity firm redefining growth with its proprietary growth engineering strategy, built to accelerate revenue and create lasting value. Matt's career path has taken him from Tufts University to Goldman Sachs and SkyBridge before joining Turn River in 2018. Throughout his career, Matt has shown a unique ability to identify and partner with exceptional software businesses and support their growth organically and inorganically alongside his colleagues at the firm. Turn River was most recently recognized by GrowthCap as a top private equity firm of 2025, as well as a top growth equity firm of 2024. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Matt, thanks so much for taking the time. It's a delight to be with you.
My pleasure. Thank you very much for having me. It's great to be with you as well. We're obviously big fans of the publication and, follow what you guys do very closely. So it's really exciting to be here.
Yeah, I think we go back with Turn River quite a ways. And I was introduced to Dom. Man, this is going back maybe close to 10 years or so when a mutual friend started telling me about all the cool work Turn River was doing. And Dom was a guy that other investors were investing behind. So when that's happening, there's something special. And I've gotten to know some of the work Turn River has done, the talent he's recruited. Maybe to start off, if you could, for the benefit of our audience, refresh on the history of Turn River. And then, of course, we'd like to talk about you as well.
Yeah, well, shameless self-promotion. I will say that we're sitting here on the day of the release of one of your private equity, top growth equity reports, which Turn River was very fortunate to be named in this year. And so I think that alone just speaks to the progress that we've made over the years. And, really it speaks to the great partnerships that we've formed with our management teams and the companies that we've worked with over the years. But to go back in time a little bit, Dom, as you mentioned, who kind of founded the firm, grew up through the traditional private equity path. But before that, really grew up working in a software business, right? So he started to see some of these patterns that were emerging in software companies. And I think there were a couple of things that started to stick out around this kind of 2006 to 2008 timeframe, which were, one, the cost of building and running software companies was just starting to come down exponentially, right? And the reasons I think were pretty well defined now, which was infrastructure costs had started to come down. You didn't need tons and tons of racks of servers anymore. You didn't need 300 people to get started. It was kind of the birth of this two guys in a laptop era, right? And so the byproduct of that was that you ended up with these software businesses that were getting started, in many cases profitably from the beginning, bootstrapped in some cases. And, they maybe were not reaching the eye-popping growth of the big VC-backed darlings, but these are businesses that were getting to good scale, 10 to 30, 40, 50 million in revenue nowadays. They were doing so profitably. They're growing. But, these businesses at the time, not really a great fit for the traditional financial community, right? They were a little bit subpar on growth rate for the VCs to kind of make their math work. They were still a little bit too messy, really, to be appropriate for a strategic to kind of take on. And at that point, the traditional PE community, it was still kind of subscale, right? And candidly, software investing was really just coming to fruition. And so Dom's vision was that, hey, wouldn't it be interesting to build a investment franchise that actually looks and feels and operates more like a software company than a traditional investment firm? And in doing that, we might be able to provide a different set of partnership opportunities to these entrepreneurs than was available from the sort of traditional path. And so that gave birth to this idea, which has now gotten to be fundamental in the way we invest, which is the world has sort of evolved from a financial engineering mindset, which was really all about leverage. That kind of gave way to a cost engineering mindset. Like, hey, how do we systematically make these businesses more efficient? Tons of private equity firms raised hundreds of billions of dollars on that, and it's done very, very well. But where we really see this next era, it's really, in our view, all about growth engineering. How can we take a mechanical, repeatable process to understand fundamentally where revenue comes from in these software businesses, and then have a perspective, but also an operational team to partner with entrepreneurs to help unlock excess revenue growth. And that's really kind of what we've built our whole team and process around here, RJ. And the cornerstone of that is having a model that's sort of flipped. We have far less investors than we do operators here at Turn River. And I think that's really been the thing that's allowed us to see opportunities differently than maybe some folks. But more importantly, it's been the thing that's allowed us to really help catalyze the value creation side of the house. So long intro, but hopefully that gives you a little bit of a sense for what we've been trying to build on here at Turn River.
And I think it is apparent, if one were to just take a look at your team structure, you look very different than a traditional firm. And I would say it's harder to replicate what Turn River has built than it is a traditional investment shop, meaning typically there's, maybe a few partners, then there's like a pyramid format where it's primarily investors all the way down. And then they have this add-on operations team or a handful of folks that drop into portcos. But you structurally, the way you're set up is different. And I noticed throughout the years that Dom would pick out certain people with different backgrounds. So maybe that's a good way to go into your background and how you found your way to Turn River.
Yeah. So I think that's exactly right. Like, we are looking for a slightly different frame than maybe some of our folks, right? And because, I will just say two things really quick. The world is exceptionally competitive. People have made a lot of money investing in software. And so everybody is now, I think, a believer in value creation as a strategy. So the question is, how do we develop an edge there, and how do we maintain that edge? And I think, to your point, people is really, fundamental to that. So I really found my way to Turn River. I would say it was a bit of a winding path. I started in sort of a traditional finance career path, began my career at Goldman Sachs in New York, working in the investment banking team there. And as I kind of, came to the end of my analyst program, like a lot of my classmates, I wanted to go to the buy side, but I was kind of thinking more the public route, right? So I went to join a hedge fund called SkyBridge Capital, which at the time was really sort of one of the pioneers in the multi-manager fund of hedge funds business. And so I got the opportunity to go there, work very closely with the management team on helping select managers to invest in, but also to help think about capital formation. How do we build our business? How do we expand to different parts of the geography that we're sort of serving? And that actually gave me something a bit unique, which was I learned how to sell. I learned how to build relationships. I learned how to articulate our strategy at a very high level to investors. And I think for me personally, that skill has actually carried over tremendously to my role here now at Turn River, which is being an advocate to founders and management teams on why our strategy is the best opportunity for them to grow their business, right? So as part of that time at SkyBridge Capital, they asked me to move to London and open up a European office for them there. So I spent about 2.5 years over there. And then I was actually introduced by chance to one of my now partners, Evan Ginsberg, who was kind of one of Dom's early partners here at Turn River. And we kind of got to talking. He was telling me about this opportunity that they were building and this idea of value creation as the strategy instead of the afterthought, I thought was a very novel concept at the time. Now, this is coming up on 10 years ago now. And so after, kind of some back and forth with Evan and the team, I decided to join Turn River. So picked up from London, moved to San Francisco. And that was the end of 2017. And I've been here ever since.
Now, I'd like to switch gears a little bit and touch on the types of investments that you pursue. And it seems like there's a lot of flexibility in what you can consider and the types of situations you're willing to go into. I think maybe one of the more notable recent ones was solar winds, but maybe tell us a little bit about investment selection.
Sure. So I think for us, and again, this might run contrary to how most other funds think, and I think it comes back to, again, the way that we're structured. We are much more focused on fit of strategy than we are of size of the investment, or maybe in some cases even end market. So I think you're very correct that we have a lot of flexibility to deploy capital, so long as we feel that the opportunities within the business are very well aligned to our operating playbooks and our ability to catalyze excess revenue growth. So if I kind of think about what we are in search of globally, we are looking for businesses that are in big and growing markets with a good to a great product, where there has been some friction that has been built up in the distribution, in the go-to-market of the business, in ways that we can identify, and then we have the ability in partnership with the management team to help fix in rapid order. And if we can be able to do that systematically, right? And again, I stress systematically. It can't be like, hey, we're going to go hire a bunch of new salespeople, or we're going to go build this new product. We're looking for process changes. We're looking for structural changes that can have an outsized impact on the growth rate of the business. And again, if we're successful, because these changes are process oriented, they're structural oriented, they tend to also bring a lot of operating leverage to the business. And so if you look across all of the companies that we've invested in, on average, right, the typical company has about doubled the revenue growth rate within the first 9 to 12 months. And the typical company that we've invested in, again, on average, across the fund life cycles, has grown its revenue base by about 3 to 4x in a 4-year period. And so what we're constantly in search of, again, are these opportunities where the business is growing in spite of inefficiencies that have been built up. And again, we highlight that these are not things that are done out of ill intent or even really done, on purpose, right? But this is like just the fundamental nature of a business compounding over the years and having these kind of small things that if you don't know exactly where to look, they can build up these micro frictions. And so our whole job at Turn River is to find these companies, look for these areas of inefficiency, and come with a known good set of playbooks to help rectify that. And so we will look globally for these types of companies. So we invest in Europe, we've invested in Israel, in Canada, in the US. So we're very much global investors. And again, that's because software is bought globally these days, right? And I think the go-to-market is not so different for a Western European company as it is a North American company. So we believe that we can, generally speaking, find opportunities globally. But also that applies to size, right? SolarWinds, as you pointed out, is an $800 million revenue business. Most people were surprised about our kind of jumping on that opportunity. But we were able to get into that company and see the machine and how it works and where the friction points were built up. And when we got to see that up close, RJ, what we noticed was this business has the same characteristics as Mailgun or Invicti or Redwood, these companies where we've had strong successes. And so when we actually look at the processes and the way the go-to-market is prosecuted, it's actually the same as all the other things that we've been successful with, regardless of the size. And so we were able to develop that conviction. Now, what I would tell you is, I think it's very possible that the next deal we do is a fraction of that size, is a $50 million revenue company maybe, or even smaller. What we're really just constantly in search of is companies where we can have a unique fit and we can be the right partner for the management teams of those businesses.
And do you find that it's more often the case when you're going into an investment opportunity that you particularly find Turn River finds very attractive, that it's contrarian to a degree, meaning not many other investors are looking at this opportunity?
I think that's a great question. So we have a saying here at Turn River, which is that there are no more secret software companies. If we know about it, so do all of our peers. And if we're calling them, they've probably heard from somebody before us, right? So I think one of a couple of things need to be true. The first is maybe that we have the ability to look differently upon a set of numbers than maybe other people are. Because again, we're looking at more of a revenue mechanic view of it versus an aggregate view. But secondly, we have to have a do different scenario in mind. We're not just betting on a continuation of a trend and thinking we can make a good return based on the continuation of a trend. We have to identify with the management team of that company a set of very specific investment theses that are, generally speaking, structural and go-to-market in nature, where if we can achieve them, a 5, 10, 15% revenue growth business can become a 20, 30, 40% revenue growth business. Again, if not for these inefficiencies that had just built up over time. So yes, we have to have that different perspective on what the world could be, but we also need to develop one, a plan for how to rectify these things. And then critically, we have to build the right rapport and the right conviction with the management team, right? We can't come in and just impose our will on these things. So it's so much of what we do today is educating founders and executives on the ways in which we can augment the things that they're already doing and be a catalyst for excess opportunity. And again, people have different reactions to that, right? So I would say a lot of what we do is really educating people on that message and showing people with data, showing people with specificity how these types of opportunities can be beneficial to them and their management teams and their stakeholders. And I think that's really the fun part, right? That's really the part that we really love as deal makers, is being able to articulate this vision for what could be and how we can play a small part in that role.
I typically ask this question to growth investors about a situation where they've created value that they're proud of. And clearly Turn River is creating value with each of its portfolio companies. But is there one in particular that maybe stands out, maybe wasn't as clear what the outcome would be, but you were able to turn it around and make it a very positive outcome?
I think that's a great question, right? We always have to deal with certain kinds of uncertainties on where things are going to land, right? But that is fundamentally the reason why we built our business the way we have, because we want to reduce that uncertainty anywhere that we can. We want to have a much more scientific approach. I'll just give you the most recent example, which was a company called Redwood Software. Redwood Software, we really built up with Kevin Green, who is, one of the best executives that we've ever worked with, and his team over the course of a 4 to 5 year period. Now, it started with a small business based in Morristown, New Jersey, actually, called ActiveBatch. ActiveBatch was a low double-digit $1 million business. It was built 35 years ago. And this is not a slight that the team would tell you this. In many ways, the processes looked like they were built 30 years ago. And so it was in a corner of the market, this concept of workload automation, that most people had looked out and said, this is a good place to be, but it's sleepy. There's not much growth here. Everybody has a solution. There's not a lot of fundamental upside to this story. Now, I think first and foremost, we were able to see just a very different picture than other people because of the way we got to the revenue mechanics and how leads come to the business, how those leads convert to sales opportunities, how those sales opportunities become deals, and what the pricing and packaging structure looks like. And so we were able to transform that business from a sleepy, one-time revenue-centric operation in about 18 months to a business that was 2.5 times the size. It went from 5% growth to almost 30% growth. And it went from 20% margins up to 40% EBITDA margins. And so we saw this kind of work in real time at a small scale. That was kind of the key point. It was at a small scale. But that gave us the right, in our mind, to look to build a platform around this. And so we proceeded to then make 4 more acquisitions. All of them were founder-backed businesses. All of them were, again, had that same framework where they were kind of 5, 7, 8% growth. They were in this broader market, which people had sort of written off. They were lightly profitable, but not super profitable. But again, we saw an opportunity here to transform the way customers learned about the product, how they engaged with the sales team once they heard about the product, how they adopted the product in terms of onboarding and usage help, etc. And then some things that really accelerated the story was we were able to develop some really substantial partnership relationships with some really big technology vendors. And so throughout that journey, we were able to take, again, a low double-digit $1 million business, transition it to a $200 million plus business in a 4-year span. And most importantly, I think we built, again, I say we, the management team built with our very subtle help, an enduring business in a market that now people have. I think the thing that we're most proud of is people now look at this market as an exciting market because they look at Redwood and they see the growth and they see what they're doing for their customers and they see the way that they're expanding and they say, oh, maybe we got that wrong. And so again, I would say that's a very exciting feeling for us. We think there are more of those opportunities out there. And when we get the chance to work with business owners and entrepreneurs like that, it's just so exciting. And we learn so much. And so that's one that we're very excited about.
Excellent. We're coming up on time. I have two final questions. These are my standard closing questions. One is, can you tell us about a person who has had a profound influence on you?
Well, I'd have to cheat a little bit and give you like a couple of answers if that's okay.
Sure.
My partners here at Turn River are exceptional people. Dominic, of course, I think has, a visionary outlook on what it means to be an investor in software. And I think he, in many ways, has forged a different path. But I would say the thing that all of our partners here at Turn River have in common are sort of a couple of things. They are exceptionally dedicated to giving the best of what we can to our partners, to the management team. We run a small portfolio, so they get every ounce of us, right? And so everybody shares that ethos. But the second thing that I've really sort of taken in from this team is that there is no ego, and we would break everything if we could find a better way to do it tomorrow. There is a constant desire to get better at what we do all the time. And so I think that's something that I've taken with me. But outside of that, RJ, shout out to my parents. They have given me so many opportunities in life and given me the confidence to kind of go out, travel the world, and sort of take risk. And I think that's something that's been fundamental to me, having these types of opportunities. So I can't say enough about the family that I had the opportunity to grow up with.
Last question, and then it might have like a slight bonus question. But last question, can you tell us about a charity, cause, or other endeavor that you're passionate about?
So I would say here at Turn River, we've been big advocates for the education system. So we've adopted a high school, not far from here called Bessie Carmichael. We try to contribute both through financial resources, but also time. We help sort of pack different types of goodie bags. We help, kind of organize days out with volunteer sort of effort on campus and things like that. So, I think for me personally, but also here at the firm, expanding on education, access to education, I think is something that we believe just drives the future of this country and is the main thing that equalizes opportunity for people. So that's always been something I think we believe very deeply in, and we're fortunate to be a part of here.
Very last question. I was refreshing on your background. Noticed you went to Tufts. We recently visited there because my daughter's doing visits, and my wife and I were recollecting the people we know who went to Tufts, and they're all exceptionally bright. Tell us something about your experience at Tufts.
I can't say enough about my time there. I had the opportunity to play sports there. I was a hockey player, so, I had a really fun experience with that. But I'd say, phenomenal academics, but challenging. I don't mean the difficulty of the academics, but, viewpoints were challenged openly, and there was rigorous debate about things. But I would say not in an adversarial way, right? People were able to challenge each other. And I think the thing that was probably, for somebody who grew up in Buffalo, New York, kind of pretty small corner of the world, go Bills, outside of that, everybody was from a different place. And so it was the most diverse experience that I had at that point in my life. And I would say that was just a tremendous sort of shaping for me of what the real world looked like and what all of these opportunities to expand your worldview could be like. And I think Tufts, I think that stems really, they've got the Graduate School of International Affairs and International Relations. So it really kind of comes from the top down. They sort of have this global point of view. And I think for somebody who, again, coming from a smaller town, looking to broaden their perspective on the world, really just such a great place. Cold as hell in the wintertime. So just make sure you're prepared for that.
Matt, thank you again for taking the time. It's been a wonderful conversation.
My pleasure. Thank you very much for having us, and we look forward to staying in touch.